Hi newbies, welcome back to Fundamental Analysis Part 2 of Trading Basics Series 2. This lecture will follow on what we discussed in the last one with the focus on the discussion at the industry or sector level. A quick recap, as we mentioned in the previous lecture, there are three different study levels for fundamental analysis. There's the company level, the industry level, and the economy level. In the company level, it involves financial data, management, business concept, and competition. At the industry level, it examines the supply and demand of that industry. And at economic level, it discusses economic dates and future growth. In the last lecture, we focused on economic level, and in here, we'll talk about the second one. First of all, I would like to introduce to you the different sectors and the definition of each so that you can learn by a few examples. The table I'll be showing you will list 9 different industries along with their percentage growth from January 2018 to October 2018. The first category or industry is the communication services. This includes telecommunication services and wireless services, that is, cell phone and internet providers. The next industry is consumer discretionary. This includes automobiles, hotels, media, and the other products that people do not necessarily need. After that is the consumer staples, which includes food, beverages, household products, and tobacco. In general, these products are considered to be necessary for people to live and survive. The next industry is the energy industry. This includes small and big oil, gas, coal, and the other resource companies. Financial industry. This includes bank and insurance companies. Healthcare, including pharmaceutical, biotech companies, and healthcare service providers. The next industry is industrial industries. That is aerospace, electronic companies, or electrical equipment, roads, railways, and the other products. Next on the list is information technology, such as Google, Apple, and microchip groups. Finally, we get to the utility providers. This includes gas, electricity, and water. As you can see on this list, in 2018, between January and October, the information technology sector had the biggest year-to-date growth compared to the other sectors. In general, every industry more or less goes through the 3 phases shown on the slide. The first phase is the growth phase, where demand is high and investors are willing to invest in startups or growing companies. Usually, many companies lose competition to bigger or better companies, or simply they got acquired by others during this phase. Investment in startups is high, and profit could be high as well if the startup succeeds. A great example is Twitter, which grew super fast and returned loads of profit to investors until it tumbled. Another great example is Facebook. Its growth went on and on until the share reached the all-time high of $220 from just under $20 in only a few years. The second phase is called the development phase, where the survivors of phase 1 stand tall and further their growth to new areas. Perhaps the growth will not be as much as before, but it's still pretty reasonable, and the return of profit to investors could be also steady. The last phase is the mature phase, where winners from phase 1 and 2 maintain their control over the market, although the stock price growth may not be as radical as it has been in the past 2 phases. Given these 3 phases, investors need to decide when to get in to take more profit from the market. If you can identify the right industry cycle, you'll be able to know when to get in and when to get out, as there could be a 4th phase, decline, after the maturity phase. One way to analyze industry performance is to put it next to the economy and identify which sectors do well during recession and which ones tend to do the opposite. For example, it is true that consumer staples do okay even during recessions because people will still need to eat. They might stay away from buying fancy cars or the latest model of a smart TV, but they will still need to spend money on food. However, high-tech stocks, real estate, and hotel might get a hit because people will try to save money and avoid spending extravagantly. In the opposite scenario, during the growth period, consumer discretionary, industrial industry, and tech stocks tend to do quite well because people will have faith in their jobs and they will keep buying more stuff in order to make their lives more entertaining and comfortable. However, gold and the other precious metal would tend to do a bit more poorly as investors tend to take their money out of the safe havens and invest in more growing industries. One way to avoid getting stuck in a non-profiting industry cycle is to diversify. When one industry is doing poorly, chances are that there's another one that's doing okay or it is growth phase. The only exception is market crash, where the entire market crashes. And even at that point, some precious metal industry can still do okay. Basically, what you need to do is first, identify the economic cycle. Second, weight each industry. Third, allocate funds to different industries. Or buy diversified ETFs. ETFs such as S&P 500 combine stocks from 500 strong companies ranging from pharmaceutical, technology, oil and gas, and consumer discretionaries. In doing industry analysis, we need to know if we are doing short-term or long-term analysis. If we really need to do short-term speculations, we need to consider the following. First, the current political and economic parameters. And second, the current competition in the market in that industry we are analyzing. Whereas long-term analysis, we need to look at the societal trend and long-term prospect of an industry growth. For instance, do you think microchips are going to be more pervasive in the future? Or will it get smaller and smaller in order to be able to create smaller electronic devices? How about online retailing? If someone had the vision to see online retail growth in early 2000 and had bought Amazon stocks, he or she would have made a huge amount of fortune. Coming up next, we'll discuss fundamental analysis at the level of the company. Thank you for watching this video, and I hope you enjoyed it. For more educational materials, find us on www.marketnewbie.com. Connect with us on Facebook and our Instagram pages. Also, click on the Market Newbie icon at the bottom right and subscribe to our channel on YouTube. See you in the next video.